And to tell us a little bit about the Kraken Bitcoin Exchange experience, I have told you about the questions that you can tweet, haven't I? Haven't seen any questions yet, so go ahead and use this opportunity. And yeah, so speaking about exchanges a little bit more.
Yeah, thank you, Lilia. Thank you for having me, guys. This is a wonderful conference. Thanks for all your hard work. Much appreciated. Thanks, Pavel, too. And everyone. So I'm going to, first, I also have to thank Sergey for setting the stage for this talk, because he explained basically the whole, fundamentals of the business model of, cryptocurrency exchanges. And I'm going to be talking about one particular exchange, namely Kraken, the exchange I happen to work for. This is not only going to be like an advertising session, it's also hopefully going to be informational. So I'm hoping we can have I'm trying to take the perspective from like an outsider's perspective and give you some kind of overview of the most pressing challenges and the opportunities in the field. So the title is called "What It Takes to Build a global digital trading platform." Obviously, we focus on all kinds of digital assets. So it's not a very modest title. Obviously, I'm not going to be able to tell you step by step how that works. It's hard to figure out. So let's look for a few seconds. Let's look back at how the traditional exchange works. So there's one example I have in mind. Everyone has heard about Mt. Gox, obviously. So there's the central piece of infrastructure, and the whole economy kind of depends on the functioning of that one exchange. And it has it plays the systemic role. If it fails, it's almost too big to fail. Just like in the financial crisis, some banks were. It caters mainly to retail customers. Customers who want to trade fiat, crypto fast. There are occasional security breaches. We've all read about the hacks and then the eventual downfall of Gox. Compliance is de-emphasized. It's not important to create for the people who run the exchange to create additional friction by all these KYC standards. So KYC standards are very lax. And there are no solid banking. There are banking partnerships, but those aren't publicized. It's not something that the banks don't walk around boasting. Oh, we work with this exchange, and so on and so forth. So this is the traditional exchange, the Mt. Gox kind of business model. So this kind of, as I said, this presupposes that there's this one centerpiece of the whole economy, or the center of the Bitcoin universe, and all these other products and all these other services are kind of built around it in the sense that they need to access this central resource. And again, if it fails, that's bad news for the entire space. So let's talk about Kraken. Kraken tries to do things a little differently. That by looking at our site, you will notice that within a second. It's not a very typical website for a financial industry firm. So how do we differ in these 5 points that I mentioned? How do we differ from the more traditional exchange? Well, we try to focus on a variety of markets. Some of them are niche markets. We have altcoins listed. We have a bunch of national currencies. Japanese yen, we're the biggest player in the Japanese yen market. We have Canadian dollars as of last week. We try to cater to both retail and advanced customers and institutions, so both big traders and the small guy who just wants to get Bitcoin because his computer he has a ransom, he has to pay someone for ransomware or whatever, or he likes to have 2 Bitcoins. We have a big emphasis on security. We have a lot of advanced security features and tools that we offer to our customers. And we take a very proactive attitude vis-a-vis compliance. So we do proper KYC. Obviously it's a factor for a lot of people who don't like that, who do not use us for that reason, but we think it's the only right solution to this problem of being legitimate. And we also have a solid banking partnership with, as many of you will know, Feeder Bank in Germany, which is a BaFin-regulated bank. Yeah, we like compliance. We think it's, we make a bet on it's going to pay off eventually to be compliant. The problem is this business model may not work if we are in a bear market and the price is going to stay low for another 2 years or so. It may just not be financially, it may just not be sustainable to just operate on these fees that you get, right? You might see the situation where a lot of these Bitcoin exchanges fold because it's just not a sustainable business if adoption doesn't rise spectacularly and the price doesn't rise. So there's certainly a problem there. Some people call it, whatever you want to call it, nuclear winter of, Bitcoin or for Bitcoin traders, and certainly a challenge that we all have to overcome. There's more challenges, however. There's certainly the problem that as an exchange nowadays, there's a lot of competition for, the lowest fees. Who offers the lowest fees to their traders? Traders really are cheap. They go for the very cheapest option. So, and that's a problem, obviously, for new entrants to the market. There's high barriers to enter the market. There's, as I said, that's already this point that I anticipated. It's a relatively mature market, so it's hard to open a new exchange that gets a lot of volume. As we all know, the regulation is always, there's a lot of regulatory uncertainty in this space. You don't never know, will you get hit with like some huge fine, or will you get arrested? There is the sentiment that the people have a lot of money and want to invest in blockchain and Bitcoin technology, do not like this, these, simple solution. Like they're more interested in like more sophisticated use cases for Bitcoin. What can we do with Bitcoin that we cannot do with other currencies? And exchanges are maybe not the most exciting, outfits in that respect. So there's also a sense that investors tend to maybe invest in more exciting companies. And obviously the banks also are a problem because you need to have, at least for most markets, you need to have a solid banking relationship, and most banks just won't do that, won't get in the boat with you or in bed with you. So that's and there's only a few ones, so there's oligopoly, so they can charge a lot of money for the basic service that they offer you because it's only like 3 or 4 banks in the space. There's also the problem that we face specifically, that we would like to save a lot of to serve a lot of markets that we cannot serve. The interesting markets, you see here, this is the Kiev spot on the heat map. So there's a lot of, we'd like to be in Ukraine. It's hard for an exchange that has an international presence and no local knowledge to really, establish a presence in that market. And not only to establish, but to dominate that market, it's even harder. It's almost impossible. So we don't have access to banking, obviously, in Ukraine. We don't have the local knowledge, and so unfortunately, for example, our bank doesn't do bank transfers to Ukraine, euro transfers. So our Ukrainian customers, and we do have a lot of Ukrainian customers, are cut off from our most liquid fiat crypto market because they can't deposit, they can't withdraw euros. So that is a problem. But there's also opportunities, as I said at the beginning. So I think there is room in this space or in this market for growth. Obviously, if price is an important factor, but if we think that eventually, if we are optimistic and think that eventually, price is going to be on the rise again, then I think there is a room for combining advanced trading features and a reasonable fee schedule, so not being too expensive, but also offer a great product for the clients, and to offer great customer service. So be responsive to customers' questions, complaints, etc. That's really an issue that we have at Kraken. We feel like a lot of people are not satisfied with other exchanges' customer service, and we try to be better than that. We also try, obviously, to offer advanced features to our clients and and reasonable fees, and also save costs. Of course, that's always important. You cannot hire 50 people to run an exchange or a trading platform. So I think if that's given, if those factors are given, it's possible to convince maybe traditional players to enter the wild west of cryptocurrencies. So as I agree with Sergey, who said, eventually it's important to get these traders on board and to convince them to enter the space. I think that's really the key challenge. There's a lot of people with a lot of money who love trading. We have to get these guys to check out these cryptocurrency exchanges or trading platforms. And that means we have to offer sophisticated tools to please them. So I was actually going to give you a little demo of our nice features, security, and all the advanced trading functionalities. I don't have time for that demo, but if anyone of you is interested in this, you can come and talk to me. I'm happy to sign you up and give you a little tour of our exchange. I'm also going to really, in passing, really quickly mention a few new products that we just released in the last months, and then if you have questions about those, you can ask me during the Q&A. So it's 2 months ago, we launched margin trading, so that's a really exciting tool, certainly. So you can basically, if you have 10 Bitcoin, you can triple your buying power, and you can go short or long on the Bitcoin price, and you will multiply your gains on your position. So we just launched this month. We launched the dark pool, which allows you to basically sell or buy big chunks of coins in like an anonymous, like a blind order book, basically. You don't see the matching orders or the matching, you don't see anything. And so the advantage is that the market is not going to be influenced by the 100 coins that you decided to get rid of. So the price is not going to move against you. So that's the idea. So you can just anonymously basically sell these 100 coins. Someone's going to buy them. There's going to be we're going to make the match between the buying and the selling position. And you're not exposed to that risk of a price moving against your position. And so we hope that clients are going to take to that new feature. Okay, one minute. We also, as I mentioned very briefly at the beginning, since we also have our presence in some niche markets, we also launched Canadian funding. So now Canadian customers can deposit and withdraw cash, fiat, So Canadian customers love that, obviously. We also helping with the Mt. Gox liquidation. I mentioned Mt. Gox in the beginning as a negative example. We help to clean up the mess. So if you are a creditor of Mt. Gox and you haven't filed a claim through us, then you should consider doing that. You will also be rewarded by fee credits if you do that. So you get to trade for free for like $1 million, basically a volume of $1 million. And so stay tuned for more announcement. We have a blog that we like you to follow. So we discuss all the new new products in this blog. So it's a good read. It doesn't take too long, 2 minutes or so, to read through these posts. That was it for today. Thank you very much for listening.
Again, the timing is just perfect, and so we have 2 questions at least to take. Perfect.
Yeah, thanks for the presentation. The question here, I hear all the time that you have mentioned multiple times during your presentation. You said the price should be right. The price of Bitcoin should be right. It should be raising, and we have this atomic winter on the price. We can move forward. So, as far as I understand, Kraken, like many exchanges, originated in the United States, living based on the fees that they're charging. So, but it's very impressive with my knowledge that I've been working with a lot of companies in China, exchanges, and China is a leader in Bitcoin industry till today, was at least. How Chinese exchanges having $10-20 million investment don't charge fees. It's a completely fee-free exchanges, and European and American exchanges are so desperate in Bitcoin price and the charging the fees on when you buy Bitcoins, when you sell Bitcoins, so based on a trade. Thanks.
So I guess the question is, why do Chinese exchanges get away with not charging any? Yeah. Why are we fee dependent? That's an excellent question. Thanks for that question. So I guess the answer is we don't. I mean, we're not focused or obsessed, as you didn't say that, but that might be a term for that, about fees, because we need that money urgently to survive. We have investors who put money in us, but we need that revenue to demonstrate to people who want to invest. We can do this. This is something that, even if we're not profitable, of course, not yet, we can be profitable if, for example, the price is such and such, and we do what we already are doing. So this is more like a proof of concept. We can be, there is such a thing as a profitable exchange in this space, and we're going to show you that we can execute that, and then that you can reward that by investing in us and showing us and supporting that future business model, which doesn't exist yet but will exist. Follow up.
But still, there's investors in China that puts $20 million in the company, and they expecting growth and show the revenue to get the money back. But still, the Chinese exchanges do not charge the fees.
Yeah, if you have some business cards of those investors, I'd be happy to get some from you, and I'd be happy to talk to them about that.
We have another question right here.
Hey, thank you for the presentation. You had this dark pool where you mix coins, right? One of the last slides. How is this compatible, or can a analysis tool, let's say, be an effective tool against this dark pool feature you implemented?
So I'm not sure if I get the gist of the question, but the dark pool is not dark in the sense that you want to erase your traces, or you want to be anonymous. When you still have an account with us, there's still some level of KYC you go through.
Yeah.
So if that's you want to fund IS with those coins, that's not a good idea. So this is just for people who have taken a huge position in Bitcoin and want to somehow cash out or whatever. For them to be able to place a 200 coin order without really that move affecting the market. It's a safeguard against market psychology, basically. So it's not dark in the sense of the dark web. That's really something we should. That's a very confusing thing about calling it dark pool, but yeah.
But are there any requirements from the regulators for you to use tools like Chainalysis? Then returning back to this word.
We haven't. No, that's also a good question. We have a lot of not a lot, but we have a few law enforcement investigations that just happens all the time. But usually they don't require us to use Chainalysis.
Okay. Thank you.
At all. Thanks.
Okay. We still have time for one more last question. Do we have anybody willing to? Fantastic. We have two. Okay. Sorry, that was the first hand I saw.
So it's very short. Why XBT, not BTC? You're the only one exchange promoting this abbreviation.
Yeah, to be honest, I think our CTO loves this ISO 247 convention for naming the currencies, and I believe that BTC was already taken by some Belizean currency officially. So if you want to be very correct. So that's Kraken, right? We want to be compliant. We want to. We don't want to do full KYC, and we also want to be use the right terminologies, even if no one cares about it, and if the audience wants us to actually switch to BTC, we keep XBT for now at least.
Thank you, and we still have one question here, so we have time.
Oh, a lot of questions.
Bitcoin exchanges are main players in Bitcoin economy, but as you showed us, they are interested in volatile. Because when price is volatile, you make money. But for Bitcoin economy, it's not very good. For evolving, we need more stable things. So how Bitcoin economy can evolve if main players are not interested in stable price?
So you're saying on the one hand we need volatility for the economy and to convince others that this is worthwhile maybe as a currency, but if you look at it as an asset that's tradable, then it's good to have that volatility. Yeah. That's a good question. I don't really have an answer. I mean, you're right. We need volatility, but for our trading volumes. But I think we'd also be okay with like price rising and like price stability at a higher level. I mean, obviously that for the fees you had more. There's more money to be made if price moves very fast. But I think stability at a higher level would be fine by us. So, thank you.
All right, fantastic. Are we ready to give a big round of applause to Johannes coming over from Germany to speak?